Welcome to this amazing video training. Welcome to this price action training. Okay, if you're watching this video, it means you are already part of what we do in the simple trader community. Okay, what we do with the simple trading system, with a simple trading methodology. And in this video, I am here to explain to you the price action part of things. The price action part of things. See, I tell people that you can never go wrong with a simple trading system. Okay, but yes, the truth is the simple trading system, it is not 100%. Okay, because in the financial market there is nothing that is 100%. If you have something that is 75%, you can win with good risk management, good risk to reward ratio. You can win with something that is 75% in the financial market. But yet, the simple trading system is more than 75%. You have seen it. It is even 95%. But then I am here to share with you the price action part of things. People who trade with the normal chart type or the regular chart type, which is known as Japanese candlestick, they have their own price action. While we who trade with the Akin Hashi, we have our own price action. The beauty between or the difference between our own price action and their own price action is that the Japanese price action is not easy to recognize. See, the normal price action, the regular price action is controversial. This one will say it is a pin bar. We said no, it is not a pin bar. This is how you define a pin bar. This is a shooting star. This is this. It is always controversial, but with the with the Akinhachi price action, it is not like that. Anytime you open your chart, you will see the price action playing out, regardless of the time frame. But then with the regular Japanese candle price action, you get to be expanding your charts. You get to be looking, waiting for a pin bar. Sometimes you will see a pin bar where there is no pin bar. Okay, so today I'm going to walk you through the price action of the Akinhachi. So without wasting time, let's go right into it. One thing about this price action is that it is not common. Okay, now, understanding this price action, you are ready to put yourself among the 5% of people who are winning with Forex. Okay. Now, the price action number one is okay. I don't name this number one, but I want you to understand that when you see sequence of green candles like this, sequence of green bodies, what it means is that this is a bullish trend. Okay, not really a price action candle. Now, when you see sequence of red bodies like this, it signifies a bearish trend. Now, the first price action candle is the strong bullish candle. When you see a candle like this that has a shaved bottom and wick on top of it, the body is big. It is called a strong bullish candle. Okay, so this is a bullish movement. Okay, now you see this green candle here. This green candle in between this red candle is a bullish candle. Each and every of these candles here are bullish candle. This one here is this last candle here is a bullish candle. This first candle here in this sequence is a bullish candle. But then this particular candle that does not have a wick, unlike this one, this particular candle that does not have a wick underneath, the bottom is shaved. It is called a strong bullish candle. Strong bullish candle. It signifies continuation of a strong bullish trend or the the beginning of a strong bullish trend. The second price action principle, or the second price action candle in the HA price action, is the strong bearish candle. It signifies continuation or the beginning of a strong bearish trend. So again, I come to it again and say, you see this sequence of red bodies? The first one here is called a bearish candle. This one is a bearish candle. The last one here is a bearish candle. Each and every one of them. This one has wick on top, wick underneath. It has wick on top and wick under. They are called bullish candle. But this one that has a shaved top, the top of the candle is shaved, no wick on top. We only have wick under. It is called a strong, not just a bullish, sorry, not just a bearish. Okay, it is a strong bearish candle. Hope I got this right. When I talked about the series of body, each of these candles are bearish, not bullish, are bearish. I don't know if I got that wrong. These are bearish candle, bearish candle, bearish candle. Okay, so this one that has wick on top, wick underneath, it's called a bearish candle. This one that has wick under, wick on top is called a bearish candle. This one here that looks like a doji is called a bearish candle. But this one is called a strong bearish candle because it does not have a wick on top. The top is shaved. Okay, let's move on to number three, price action number three. Now, what we have here in our screen is a bullish candle, but then we call this one a weak bullish candle. You see, it has wick on top, has wick under. Is a weak bullish candle. Now, what a weak bullish candle signifies, it signifies a weakened bullish trend. A weakened bullish trend. Or it shows consolidation of markets. And when you see these candles, after you've seen strong bullish movements, strong bullish candles, and then these two candles appear, or one of them appear, what it signifies is that the market is consolidated and is about to reverse. The trend is about to reverse. Okay, so it shows consolidation or reversal of trend. Now, this one here you see here is called a weak bearish candle. You see, it has a wick on top and a wick below. It is called a weak bearish candle. Now, what happens with this candle is that it signifies a weakening bearish trend, consolidation or reversal of the trend. Now, let's go to price action number 5. Now, you see candles like this. It is just like the strong bullish candle, but the difference is that the body is small. The body is small. This one looks more like the strong bearish candle, but the body is small. The body is small. What does this two, whether bullish or bearish, what does it signify? It signifies that there is low momentum either in a bullish or a bearish trend. The momentum is low. There is no buying, there is no selling pressure. Now, the sixth price action candle is called the doji. The doji. This is the doji. A doji is when the open and close price is the same, but have a high and low. So we have the bearish doji and the bullish doji. Now, what doji signifies in Akinachi is indecision. Indecision. Now, indecision is followed by continuation, continuation of trend or reversal. Okay, so after the indecision becomes a what? A decision. When you see an indecision candle, what follows next is the what? a decision candle most times. Now, the decision could be favoring the trend or go against the trend. So you want to be careful. I tell people sometimes you don't really make a decision based on a doji. Okay, you want to watch out for the next price action. If you are to use just the candle to make your decision, if you are not putting any other factor into consideration, don't make that decision based on the doji. You know, when the doji, for you to know that this is a doji, the candle must have closed. You don't decide a doji when the candle is still running. Okay, the candle must have closed, and then you say, ah, this is a doji candle. Okay, not that the market opened today or the market open, yes, let's say the market opened today or the market opened in a 1 hour candle or in a 4 hour candle. The candle just opened, and then you see that, because the open and close are closed, you just conclude that this is a doji. You don't conclude that the candle is a doji when it is still running, when the candle has not completed its life course. Until the closure of the candle, before you can decide that that is a doji. Now, when you decide that this is a doji, that is when you do what? You wait for the next price action candle to give us the decision. Let's move on. So the first one we talked about is a sequence of what? Green bodies. So we have finally identified the six price action candle. 1, 2, 3, 4, 5, 6. Okay. Now let's go over them one after the other. So the sequence of green body that signifies what? A bullish trend. Okay. So when you see something like this in the markets, you open your chart one day and you see bullish trend. What do? You wait for the close of that day candle. Wait for the close of that particular day candle. If that particular day candle closes as a bullish candle, okay, take a buy trade. Especially a strong bullish candle, take a buy trade. Please, never you take a trade when, or never you enter a trade. Okay, never take a trade execution if a day candle closes as a weak bullish candle. Okay. Now, if the candle comes out, you see sequence of what? Of bullish movements, because sometimes some people may not catch the trend from the beginning. You just, okay, try to say, let me trade, and then some of us may be coming to the market for the first time, so we may not be watching the market to catch reversal. So when you enter the market or you learn about Akinachi, and then you want to enter the market, or maybe let's hold it let's not go there. You want to enter the market, and you've seen that we've seen about 1, 2, 3, 4 bullish movements already. 1, 2, 3, 4 bullish movements. What do? You wait for that candle to close, the current day candle to close. Okay, you wait for it to close, and then when it's closed, you make your decision. But if it closes as a bearish candle, then you do nothing. Okay, that is when you want to analyze again and find out what is happening. So again, I want to make you understand some certain things about Akinachi. We have the bullish candle. So when we say bullish candle, what we mean a green candle, and a green candle signifies upward movement in price. Now, a sequence of bullish candle signifies an uptrend. A strong bullish candle is a green candle with no lower shadow, indicating that the that we are currently on a strong uptrend. Okay, strong bullish candle is a green candle with no lower shadow, no lower wick. Okay, indicate a strong upward movement. Now the uptrend gets stronger with more longer bodies. Okay, it gets stronger. Take note of this term. The uptrend, okay, gets stronger when the new candles coming up are green candles, not just green candles. They don't have lower shadow, they don't have wick underneath, and the body of the candles are longer candles. Okay, this one is long, this one is longer, this one is long. But what happened to this one? This one is no longer long compared to this one. So when you see that the body of the candle is getting long, or is long, remain long with no bottom wick, know that the bullish trend is getting stronger. Okay, so but when you experience that it is the we'll get to the price action. Okay, that will talks about that. Okay, now the second one you want to see, the second one here is a sequence of red bodies. It signifies a bearish what movement. Now again, take note, a bearish candle is a red candle and it signifies a downward movement in price. A sequence of red bodies identifies a downtrend. A strong bearish candle is a candle with no upper wick, no upper shadow, indicating a strong downtrend. Now the downtrend gets stronger with longer bodies and no upper shadows. Okay, the same thing, opposite is the case. Now what do you do when you come into the market? You see that there is a sequence of red candles. You wait for the closure of that day. When the following day, when that day close as a sell, you take a sell trade for that day. Okay, but when you are coming into the market like this and you see that this day closes as a buy, what do? You wait until this day closes as a sell. You can enter the market again. That is it. Now let's talk about the first price action candle, which is a strong price action candle. Okay, the strong bullish candle that signifies continuation or a start of a bullish trend. What do you do when you get a candle like this? When a candle closes as a bullish candle, you take a buy trade when you see a strong bullish movement, either in the start or in between a trend. So that is what you do. Okay, wait for the close of the candle. If it closes as a strong bullish candle, take a buy trade. So it's a strong bearish candle, which is number two, signifies continuation or the start of a bearish trend. What do you do when you see it? Wait for the candle to close. When it closes as a sell, take a sell trade. Okay, either at the beginning of the trend or in between the trend. So you see now, these are sequence of bullish movement showing you what, that these are bullish movement. These are sequence uptrend. It shows uptrend. While this one shows what, downtrend. Okay, downtrend. Now let's move on. Price action number three. We have the weak bullish candle. Okay, the weak bullish candle. You get the points. The weak bullish candle. Now it shows a weakened bullish trend. Now one thing you must take note is don't enter a trade when you get a weak bullish movement. You want to wait for a strong bullish movement. Yes, sometimes you will discover that a weak bullish candle may start the trend, may start an uptrend, but then to confirm your entry, you want to wait for a strong bullish movement. So don't enter trade, okay, unless you know what you are doing, okay. But what I tell you is don't enter a trade with this, okay. Why? Because it is still weak. Anything can happen after the weak candle, okay. Now there is something you must take note. When you see two weak bullish candle preceding each other, especially after a long bullish movement, and you then see these two weak bullish candle preceding each other, you want to consider leaving the markets. leave the market on the nearest resistance level, or you set your take profits at the nearest or before the nearest resistance level. But if price has already touched the resistance level, what do you do? I mean, if price has already touched the resistance level before these two candles appear, leave the markets. Leave the market, close your trade. Now, what it shows is that these two candles, it shows that the bullish trend has been weakened. The trend is exhausted. There is likely to be a potential reversal, as you can see at this point. This is a bullish trend. And then what comes up? Two weak candle. So you see this one now, you see there's supposed to be a resistance line somewhere around there. So price has already touched a resistance line. And then this two candle comes up. It shows that the trend is weakening. Okay, the buy trend is exhausted. There is a potential reversal. The volume is not declined because there is lack of interest and participation in this particular market at the time. What do? You want to what? Exit the markets. When you see two weak candle appearing close to each other in a consecutive or sequential order, with one coming after the other or coming before the other in a continuous way, not interrupted by another candle in between. Okay, you see this one? This one here is a weak bullish candle. So you see, sometimes it can be interrupted by a strong bullish movement before you see another weak candle again. No, I'm not talking about that one. I'm talking about when there is no interruption. They follow each other sequentially. Okay, then consider leaving the market. What happens next? You see the market begins to fall down. So the trend gets weaker with smaller what? Bodies, possibly with the emergence of a lower and upper shadow. So the body of this candle is what? Is small, up, up, up weak, lower weak. So this is how you define a weak candle. Small bodies with upper weak and lower weak. So when you see this, it means the trend is weaker. Now, this is how it plays in a particular market when the market is uptrend, bullish movement. What happens next is a Akinci candle with lower wick suggests the uptrend momentum is slowing and possibly what? Reversing. Get out of the market. Okay? Get out of the market. So when you see a strong bullish movement, for example, like this, you have hold a long trade. You have hold this trade for a long time. Whether you cash the trade or maybe you even enter from somewhere around there, okay, somewhere around there, and then you know that the bullish trend is has been riding for long, and then you even see one of it. If you see one of it even, what does it tells you? It tells you that, especially when that one of it appears at a resistance level, it tells you that the trend is weakening. Leave the market. The market is about to what? Reverse. So you see, price has come to an high, a resistance level, and markets show you this. Okay, possibly what would have happened is that even the profit you have made to this extent would have dropped a little, a little. So you want to consider leaving the market on the close of this candle. Okay, don't wait for this candle to close for you to leave the market. Leave the market. If you have catch a lot of profits, keep your profits. Price action number 4, the weak bearish candle, just like the one we just showed, opposite of the weak bullish candle, which shows a weakened bearish trend. Don't enter a trade on a weak bearish candle. So the same thing happens. The same thing happens. It shows that the market is weakening, the trend is weakening. So when you see a strong bearish trend like this one you see here, and then smaller bodies, candles with smaller bodies begin to emerge, what do you know? What do you see? Or what happens then is that you know that the trend is weakening. So you see here we also have two of them appearing. Don't even wait for the two, but when you see the two appear, maybe you're probably trying to make a decision and you don't know what to do. You are still struggling with the decision whether to leave the market. But when you see these two, know that the market is about to reverse. Okay, so if you have entered a trade from somewhere around there, let's say you enter a trade from this candle, and then you get here, you close your trade on profits at this point. If you don't close, you want to wait for a confirmation. When this candle is closing, what will happen? It means you are closing somewhere around here. Why? Because the next candle becomes a bullish candle that would have tell you to exit the market. We eat some of your profits. We take back some of your profits. So we are using price action to ensure we bank most of the profits. Price action to enter the trade on a bullish movement. You see, like we talked, okay, on a bearish movement, okay, strong bearish candle like this, we enter the trade, and then when we got a weak bearish candle, we exit the trade. So we are exiting at the right time, and that is if you are not using this support level as a take profit level. If you have used this support level as a take profit level, it means you have cashed most of the profits. Let's see how it played out. You see the downward trend, and then the weak candle appear. Now, when you see this weak candle appear, and you decide to leave the market, and then comes another candle, which is a strong candle. Be careful, don't enter the trade. Be careful. You have made this profit, so don't enter this trade if you have exited from here. Most of the times, what you will see is that I'll show you this in the live chat. On the live chat, what you will see most of the times is that market will never even go anywhere, or by the time it will give you the real exit, it will put you on loss. Or even if you are holding this trade and you saw this and you did not close your trade at this time, and this one appear, when the next exit candle will appear, like for this one you see here, it will the same the place where you exit the market, the price where you exit the market would have been the same price you would have also exited if you have exited early enough. So this is it. So you see now, you see it in action, a bullish movement, and then you see the bearish, weak bearish candle, and then market begin to decline. Okay, so that is it. So let's talk about the fifth price action candle, which is the low momentum bullish and bearish candle. Low momentum bullish and bearish candle. Before we talk about that, let's go to the live chart even. Okay, so you see on the live charts, um, you see this. Okay, let's expand this for you to see. Okay, you see this bullish movement. We caught this bullish movement. We took this trade on profit. In fact, we took all this trade on profits. All this trade gave us massive profits. We took this trade on profits. Markets came like this, got weak, and then we got the entry again. We took this trade on profits. Myself and most of my students will bank all of this trade. Who do you know cashing all of these profits? Who do you know? Which trader have you seen? How many of them? There are not so many. The ones not using Akinashi, they are those using normal regular price action. It is not really easy to cash trade like this. They are there. Yes, people are cashing it, but how many of them do you know? Have you been able to cash trade like this more easily before now? But the simple trading methodology is helping you to catch this trend. We caught this trend. We took this trade on profit. We aired onto this point. We closed our trade when we got this weak candle. Can you see that weak candle? Let me show you again. Let me expand. That was when we closed our trade. Okay. Aha, this was where we closed our trade. I remember this trade very, very well. Few days ago. Okay, so we held the trade down to this point. Price got to a resistance level here. We still held the trade, okay, until we got this, and then we left the market. When we left the market, we got another entry, and we took this sell trade. Most of us bank a lot of profits from this sell trade. We did not miss it. Now, when the market came to this point, we exited our trade on this weak candle. Some of us that will see this video will testify to the fact that we took this trade. Okay, some of you watching this video, if you have been part of us before, some of us will testify that yeah, we took this trade, though I made so much profit from this trade. So you see where we exited the trade, you see it, we exited the trade at this point, at a two bearish candle. Leave the market. Now at this point in time, I will tell you something about for people who trade lower time frame like the 4 hours and the 1 hour time frame. When you see a weak bearish candle like this on the daily time frame, it means these are days you don't trade the lower time frame. I don't know if you understand. On the daily time frame, you see weak candles. You want to be careful going back to the 4 hours to cash trade. Trading is not every day. It's not an everyday business. What have you been doing all these days? For those of you who are even taking trades on you are day trading on the 1 hour time frame, what did you do this day? This day you would have made so much profit from the 1 hour, because the daily time frame is telling you a strong sell. So on the 1 hour, you should have been cashing the sells. The sells move. Don't catch the buy move. Catch just the sell move on the 1 hour. Catch this following day. You see that your day trading will be so profitable. So imagine that from year to year, probably you have made times 5 of your account or whatsoever you want to be doing. I don't know how you want to do it. Times 2 of your account, you have made your 20%, 30%, 10% profits out of the market. Now, when you see that this day is a weak sell, you stop your day trading, go and flex your money, go and spend time with your family, go and focus on something else. You come again, this day closes as a what? As a weak sell. You leave the market. Don't trade. Okay? The same happens here. So whether you are trading, you are trying to cash trade on the lower time frame, you want to use price action on the daily time frame to know what to do. Okay? So that is it. Let's move on. So we have a low momentum bullish bearish candle. I can see one here. I just spot one low momentum. As you can see, this current candle is a low momentum candle already. This current candle you see here is a low momentum candle. Okay, is a low momentum candle. As you can see, it's small. The body of the candle is small. Compare it now to these other candle bodies. Compare it. They are not comparable. Even this first bullish candle, you see how small it is. Okay, not so big, but this one that is here is even smaller. Although the market has not closed for the day, so let's see. But this alone tells you that it will not even go above, because when an Akenachi candle forms, it forms most times the body will just show its true character. Okay, it will just show the true character. Okay, of the candle, though it still moves up and down. Okay, so a low momentum bullish and bearish candle, what does it signify? That there is no buying or selling pressure. So here it means that this is a pullback. It probably could be a pullback. We are here now. Okay, we have exited trade here. We are still waiting for a confirmation to enter the trade. This was supposed to be our confirmation to enter the trade, but then we are experiencing that this is a weak bullish candle. Okay, so could this be just a pullback and price will begin to continue on the downward? Okay, so when you see a low momentum bullish or bearish candle that signifies no buying or selling pressure, what do you do? If you see this in between a trend, if you see it in between a trend, do nothing. Okay, don't do anything. Wait for the next candle and analyze. Okay, let me find a situation where that occur. In between a trend, a a a low momentum candle in between a trend. Okay, my chart is loading. Let's refresh this. Okay, I'll come back here. But if you see these low momentum candles, if you see this after price as it is support or a resistance level, it indicates that the pressure for that trend is exhausted. Leave the markets. Leave the markets as well. If you see it at the beginning of a trend, you want to be careful before entering that trade. Wait until you see a strong movement. Wait until you see a strong movement. My hotspots. Okay, I'm connected. Okay, let's allow this to load. Let's move on. Let's move on. So you see that you see this operate here. This is a what? A low momentum bearish candle. Price has gotten to a resistance to a support already. So when you see it here, it means price may not even bust this level because what? It may not go down below this level because the momentum is low. No pressure to break that level. It happens the same thing on the upside of things. Price has gotten to what? Resistance level, and then a low momentum bullish candle appear. It didn't bust this. What happened? Leave the market because market is about to what? Reverse. You see it here, it then it reverse. When it happen again, it reverse at the downside. That is it. Okay, I was trying to look for a low momentum candle in between a trend. Aha! You see this one here? Let's expand this. So you see this bullish movement, this strong bullish movement, and then you have a low momentum candle. Okay, and like I said, when you see this in between a trend, you see a low momentum candle in between a trend, do nothing. Okay, so at this point in time, you don't do anything. You wait. You wait. The next candle tells you the market continues on the what? Upside of things. That is what it means. Now, price action principle number 6 is a doji candle. Okay, a doji candle, a doji candle. So number 6 is a doji candle. Now this is a doji candle. What does a doji candle? Doji candle is, this is it. Okay, is a candle where the open and the close is the same price. It has wick on top and wick underneath. So it shows consolidation or reversal. Okay, so a consolidation or trend reversal is likely to emerge or is likely to happen with the emergence of doji. Okay, is likely to happen with the emergence of doji. Now a doji candle is a small body surrounded up with lower and upper shadow. Now what does it indicate? It indicates two things, so you want to be careful. It indicates two things. Number one, it indicates a change in trend. And number two, it indicates a pause and a continuation in trend. I don't know if you understand what I just said. This is a sequence of sell candle. There comes a doji. A doji means whenever you say a doji, for example, if this is a daily time frame, okay, it means that day if you have been on profit like $50 profits, that day market will be consolidated that day. Market will not move. Okay, market will not move. Market will just be in one place. Your $50 profit will remain $50 profit. Although it will be just going up down, but it will close as the same $50 profits. So there is no decision there. It is an indecision candle. The following candle will decide. The following candle also comes out to become either a weak buy or a doji buy. Okay, so you don't decide based on these candles, you decide on the next candle. Okay, you don't take a decision if a candle closes as a doji. Don't take a decision. You only take a decision when candle close as a doji, when you know that you have been on a long trend, either buy or sell, and you know that this doji is appearing after price has gotten to its resistance level. So you know that this is likely a reversal. But when price is still in a trend, no clear or strong support or strong resistance level at that point in time, that doji may represent a pause in trend, a consolidation to be followed by continuation in trend, like you see. So you see the market, the sell market, a doji appears, it shows a pause in trend, and then it continues. It continues. Okay, this is where you see it signifying a reversal. So you see here now that the trend, the bearish trend has been long, and then when it appears as either bullish or bearish, you know that this is the time to leave the market. Leave the market. Don't wait for any other thing to tell you before. What do you want to wait for? Leave the market. Okay, you've caught all these profits, or maybe you did not even enter on time, but you know that the market is long, is already what exhausted. You leave the market. So here again it represents reversal. Here again it represents reversal. Here again it represents reversal. So this is Akenashi again. You see it here again that no bottom shadow tells you an uptrend. Okay, no top shadow tells you a downtrend. Okay, doji with up and down shadows signifies change in trend here. Signifies change in trend here. Okay, so when you see a doji here, the market has been selling. When the doji appear here, market what went up. When the market has been going up, a doji appear here, market what came down. And then you see when market was coming down, it get to this point, a weak sell candle appear, and you know that market has already hit has gotten to a support level. What are you still doing in the market? Leave the market already. Don't wait for any other thing again. Leave the market. Okay, so either you have taken profit on support, or this signifies your exit out of the market. So market has been buying, and then you see another word, doji. Like I said, wait for the following candle. It signifies a what? A congestion and a possible continuation. Okay, a congestion and a possible continuation. Okay, so by the time you apply all the things I've taught you in this class, for example, your 8 EMA, you will know some of the trade to cash. Okay, putting everything into consideration. Okay, your support and resistance, you will win. Okay, this price action, learning and understanding it, and feeling it in the market, seeing it how it plays, will help you to be how do I call it? It will be the only grade that you have been looking for. Okay, it will be that thing you have been looking for. So people when I sometimes post trade results, people are they feel like don't you have losses? It's understanding price action. Yes, we close trade on loss sometimes, but then when we enter trade and when we see what we need to see, our trade profit will put us on massive profit that we did not even know that we have a loss. For example, I closed a trade on $16 loss. $16 loss. The next trade I took put me on 200 on $260 profits. How can you compare those two things? Okay, so that is it. Now let's see some other application of Akinachi price action. So you remember we talk about the eighth EMA. So during the eighth EMA, you see when price cut below, what happened? It signifies a sell signal, and then you sell. Okay, when price cut above the eighth EMA, signifies a buy signal. Now I want to show you something here. You see, market has been selling, and then there is a resistance level down there. The next candle happens to be a what? A weak sell. Leave the market. This is how it look like on the Japanese. I think this is a Japanese price action. So at the time when this price action is happening, a price action for Japanese, I don't know what this means in Japanese candle. Okay, I'm not so good in Japanese price action. I know just a few of them. So this signifies a what? A bullish signal. Leave the markets. Okay. Yes, but by the time you are so strong and so used to this thing, sometimes you may not even need to wait for this candle. But I'm not telling you that yet. You may not even need to wait for this candle to appear. This will even signify a buy signal for you. Okay, but then that is not what I'm telling you. You understand that this is a signal for what? Exit. Your strong buy candle is a signal for what? Entry. As you see here, your strong buy candle is signal for entry. Okay, so that is it. So you see here, the two candle is what? A bullish trend, two weak candle. Exit the market. Okay, exit the market. There comes on the Japanese comes an inverted hammer, telling you that the market is what? Going down. So exit the market. Now, some of the limitations of the Akinachi price action or Akinachi itself. One of the limitations is that Akinachi hides the Ashwa price. It does not show the Ashwa price. Okay. While the Japanese candlestick are derived from the Ashwa price, Akinashi candlestick are not derived from the Ashwa price. This is because the Akinashi candlestick are average by nature. They do not show the exact open and close price for a particular period. So what do you do? Knowing this fact, knowing this information, I would advise anybody who ever want to trade Akinashi, even on a lower time frame, never to trade it on 1 minute, 5 minutes. Why? Because you know there you have just short moves, short move upward, short move downward. Okay, and then because the main price is not really showing, you may not know that price has gotten to its high. So don't trade it there. Trade it only on the higher time frame. But the impact of what we just talked about, the impact of this, one impact of this is this. When you enter a set trade from here, let's take, for example, you enter a set trade at this point in time. Now, sometimes while the market is even going down, sometimes even at this candle, you may even find out that you are still on a loss. Okay, or you are not making so much profit. But here, looking at the Akinashi candle, you feel like price has come down, 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 down. Okay, sorry, let's work with this. Let's work with this. Aha, that's bottom. Let's work with this. Okay, sometimes you may find out that price is still for here. It look that it seems like price has gone far. Price has gone far. Okay, but when you look at the actual price may not have really gone too far. Okay, sometimes. Okay, so you see now, you see at this point, it came down, but at this point, it also puts you back on low. You see that there's a wick. I don't know if you can see that. Let me expand it. So even if you have entered the trade on this level and then market came down, okay, the following day market would have also put you on, you see, nearly almost on a loss. Okay, but then you will not be scared because you are not looking at the Japanese candle. But then you see that price went up to even your entry the following day. This is why we say Akinachi does not show you the real price. So in Akinachi, what you would have seen that market never even went to that point. So you are feeling safe, okay? The point, this point. So you are feeling safe, okay? But then on the third day, you feel that security will be there because by then, let's put this here, by then price would have gone so far, okay? Aha, so you see, the third day, you see price will never go back to your, will never go close to your entry again. You see the thing now? The third day will put you much on profit and much confidence to ride the trend, okay? So when we say Akinachi does not show the real price, the only thing you do there is switching between Akinashi and a candlestick does not cost you anything. It does not cost you money. It does not cost you time. It's not. Look at it now. We're on candlestick. Count 1, 2, 3, 4. Before 5 seconds, I have switched to Akinashi. So what prevents you from switching to candlestick to get the real price? You see the point now. Say for example, now I want to get this swing low, this swing high, or this swing low at this point. Okay, let's do the swing high, swing low. Okay, this is a swing high. For example, let's work with this level, and for the swing low, let's work with this level. So I've gotten the swing high, swing low with Akinashi already. Let's delete this. Okay, so I've gotten the swing high, swing low on Akinachi. Now I want to use, maybe I want to use that level for something. What I do is I switch to Japanese candle and get the level. Get the level. So it doesn't really affect you. It only affects the current price. Okay. It's the current price that affects. Okay, the current price. So just that's why from the beginning of the whole thing will tell you, if you have not watched those videos, go watch it. Okay. Work with the best risk management system. I've given you the plan, the rules of your lot size. Stick by it. Okay. So it doesn't really matter that it doesn't show you the correct price. So long you know what you are doing, price will go your way, eat your take profits. Okay. To go your way, give you the right manual exit, you leave the markets. Okay. So that is it. Thank you. Thank you. Thank you. Thank you. Thank you. So this is the end of the price action. Okay. So if you don't understand fully, don't worry. You keep using it and it will get used to you. Okay. By the time by just a sight of all of these candles, I understand what is happening in the markets. That is because I probably used this system for more than a year. Okay. I have understood this because I've used it for a very long time. So what you need to do right now is begin to trade with it. If you don't want to trade live account, trade demo to master it on demo. Okay. I demoed this for 6 months. 6 months. That was when I discovered all of these price action candles. I never really did learn this from anywhere, this price action. Okay, I didn't learn them from any YouTube video, from any course. I demo traded this for 6 months. While demo trading, I was discovering things, new things. So while you are trading, you will still discover more new things. And then when I discover new things, I put them into test. I found out that this is how it is. I went and do my research and discovered that yes, it is what it is. So what you need to do right now, you've gotten the entire strategy of the simple trading strategy. Go and begin to implement. Go and trade. There's nothing that will teach you again that live trading will not teach you. I mean, live trading either on a real account or a demo account, it will teach you more. I have showed you everything. Now the job is left for you. Go and trade. Okay, go and practice, go and fail and learn from your mistake. Okay, but come back to these videos, watch these videos, get the information you need to get from these videos and go back. Okay, do more research. Okay, I've exposed you to what can be your winning edge. This is my winning edge. This can be your winning edge. They said there is no holy grail in the financial market. I call this my holy grail. Okay, so thank you for being part of the simple trading community.